Hello, my name is Julien Nillon. I'm a financial analyst and the founder of LPE Research, an independent equity research firm exclusively dedicated to asset managers and specialized on French small caps. Last week, we have been working on the company Bigben, and today I'm going to present our first analysis on this stock. Before I begin, I would like to remind you that this video is not an investment advice, but only an opinion. We do not do any business with Bigben and do not hold any long or short position in its shares. Having said that, let's get started. Founded in the early 80s, Bigben is now active in four areas. Firstly, the group design and markets accessories for mobile phone and consumer audio products. These two activities, mainly conducted in France, together represent more than 40% of the group turnover. Secondly, through its 76 own listed subsidiary Nakon, the group is involved in video games as a designer and distributor of game accessories, such as controllers and headsets, but also as a developer and publisher of video games. In this last activity, the company that has positioned itself on AA games, niche games with moderate budgets, is experiencing strong growth. While Nakon represents nearly 60% of group turnover, the company generates nearly 90% of the group operating profit. Listed for more than 20 years, Bigben is a company that has undergone major strategic changes during its history. Founded by Alain Falk, an engineer, Bigben was originally a distributor of electronic products and gadgets. In the 90s, Bigben entered the video games business, first as a distributor, but later as a designer of accessories and editors. This activity quickly became the most important of the group. In 2012, the company acquired Model Labs Group and became the French leader in the design and distribution of mobile phone accessories. Finally, 3 years ago, the company decided to stop being a simple video game software publisher and to develop its own games and have its own studios. In 2020, in order to accelerate its growth in this field and better value this activity, Bigben put Nakon on the stock market. In our opinion, this strategy of integrated video games studio originates from the founder's desire to make his group a more recognized company. While Bigben image is associated with the sale of low added value electronic products and accessories, Nakon has a more prestigious image as a game creator. However, this strategy was also a response to the evolution of the industry. Indeed, the development of dematerialized game platform was threatening simple game publishers. Anyway, since 2018, the group has multiplied its acquisition of studios. As of today, Nakon owns 14 of them. The group is notably present in racing, sports, adventure, and simulation games. In addition to acquisition, Nakon has considerably increased the level of its investment in the development of new games, with the ambition of releasing games generating 25 million euros each. Nakon, which is planning 60 million euros of investment per year, is thus targeting an annual game sales of around 150 million euros. Will this strategy be successful? At this stage, it's not yet certain. At the time of the first half results, the group issued a profit warning and announced that it was postponing the release of 4 video games that were scheduled for the end of the year. Game release delays are commonplace in this industry, but they are also indicative of the risk inherent in studios. Delays in the release of games are paid for in cash. Salary must continue to be paid during this time. The management of creative studio is also very different from simple publishing. Creative teams that have been bought out can easily lose their motivation in the context of a large group. It is a new business also for the group. Yet, while caution should be exercised, we believe that the company should succeed in achieving its main objectives. First of all, the group remains an experienced publisher and know how to put pressure on the studios. Secondly, the studio managers are also highly incentivized and motivated in the short term on the success of their game releases. Finally, this new activity is at the heart of the group growth and therefore focuses all its energies. On the other hand, the outlook for the group other activities is not very promising. Video games as accessory, which enjoy exceptional level of activity in 2020 thanks to the lockdown, will have difficulties in regaining these record levels. Despite the acquisition of headphones in the US, which has given Nakon a new dimension, that will remain a challenge. In audio electronics products, Bigben will benefit from the recent acquisition of Electronics, but the growth dynamic of these markets remains weak. Finally, we fear the sale of mobile phone accessories will remain under pressure in the context of falling smartphone sales. Indeed, beyond the poor dynamic of these markets, Bigben sells its products mainly through physical distribution networks and is increasingly threatened by Amazon. To survive and maintain its margins in these activities, the group will have to remain very innovative, continue to move up market while reducing its cost. This remains a real challenge. However, in the end, Bigben's financial performance will continue to be largely determined by that of Nakon. Despite the forthcoming increase in the free float, more than 90% of Bigben's net profit should remain attributable to Nakon. Similarly, the evolution of cash flow will depend mainly on Nakon. The group is expected to continue to burn cash again this year and will only return to a positive free cash flow next year. On the other hand, Bigben's own debt should increase more rapidly than Nakon due to the acquisition of Medtronic. This raises the fundamental question of whether the current dual structure still makes sense. Investing in Bigben today is above all investing in Nakon. However, the synergy between Bigben and Nakon do not seem very important to us. The founder of Bigben, who is now the CEO of Nakon, focuses on the development of video games today. Would a total spin-off make sense? Certainly, and this is a movement that is slowly taking place. Bigben has announced the distribution of 5% of Nakon capital in kind. As we said, investing in Bigben is first and foremost investing in Nakon. So in order to value Bigben, you have to value Nakon first. However, it is appropriate to be cautious. As we have seen, Nakon has just issued a profit warning and will post a drop in result for the year. In the year 2022, should see a very strong increase in turnover and results, but these increases are widely expected, and it is better that the company does not disappoint once again. Over 2023 and beyond, Nakon will need to demonstrate that it is capable of maintaining a high level of activity. Finally, Nakon, like Bigben, does not have a very good stock reputation. In this context, also, Nakon valuation multiples may seem low in absolute terms and relative to the sector, but considering risk, the company is not excessively cheap. Nakon multiples are quite comparable to those of French companies such as Ubisoft, Focus or Guillemot. It should be noted, however, that a conservative DCF with a WACC of 9% and an exit EV on EBITDA of 5 give a value of 6.5 euro to Nakon stock. This represents a potential appreciation of 25% that can be easily achieved if the new games are successfully launched. Once Nakon has been valued, it is simple to value Bigben by the sum of the parts. Also, there are few comparable companies listed in mobile phone accessories and audio products. It is still possible to value this activity using Bigben historical multiples and market multiples. Thus, in view of the poor prospect of this activity, it seems reasonable to us to value this activity at 0.5 times, 4 times their sales and 6 times their EBITDA. This gives us an enterprise value of 55 million euros. On the basis of our valuation, the 76% of Nakon represent 425 million euros. In total, we obtain a value of 23 euros per share. As mentioned, for this upside potential to be achieved, Nakon must not disappoint in 2022. But for those who do not want to bet on Nakon, there is an interesting arbitrage to be made. In our opinion, Bigben's own business is worth 1.5 euro per share, but the current price of Nakon and Bigben shares show a negative value of 1.75 euro per share for this business. This is an interesting arbitrage opportunity because this difference will disappear mechanically if Bigben continues to distribute its Nakon shares, or, better still, decide to carry out a full spin-off. That is for today. I hope you have enjoyed this video. If you would like to know more about our opinion, you can contact us and order our first analysis pack. That includes our presentation, our forecast, our valuation model, and our stock reputation measurement, and allow you to discuss with me. In the meantime, do not hesitate to subscribe to our YouTube channel or to visit our website at lpresearch.com. I wish you all a Merry Christmas and see you next year!